In this presentation, we will continue on with our S Corporation comprehensive problem. Part number 18, we're now going to consider the diagnostics. Diagnostics are something that will typically be generated by the tax software, this tax software being Lacerte tax software, but most tax software will have some kind of diagnostic system that will help you to catch some things. The tax software will try to put some checks, some nets in there to tell you some things within the data input process as you input the data. So that's going to be very useful tool as you enter this data into the system. If you don't have the tax software and you're entering this information into just the tax forms, then these are some things that you might just want to consider as you're filling out the tax forms and just get a feel of some things that the software can do for you. We will be using Lacerte here. Lacerte's owned by Intuit, the owner of QuickBooks, but again, many other types of tax software will have a similar kind of diagnostic process. So here we are in our 1120S. So we've entered the data. We've entered the data from our Excel worksheet, and we've got the data from the client. We entered it into our Excel worksheet. We entered it into then the tax software, and we've tied out basically our income numbers here into the page 1 of the 1120S, the Schedule K, and the M1s. Next thing we want to do is look at the diagnostics of the software. And most software will have some type of diagnostic tool, which is nice, because it'll catch some things before processing or filing the return. So things like the balance sheet being out of balance or something not being filled in, those types of errors are something that Diagnostic can help out with. So if I go through here, obviously we're going to have some things where the forms aren't finalized, so we wouldn't be able to finalize the return until the forms were finalized. But if I scroll through that's going to be most of these diagnostics. So the federal worksheet page 3 is included in the draft form, so that's going to be draft form. And we have draft form. The entity's telephone number is required, so we don't have the telephone number. So I could go back here and put in a number. I'm just going to let's put 999. So there's our telephone number. I'm going to go back to the diagnostics and say, all right, that's a required field. Shareholder, the address, and city and state. So we're going to need the address. Federal, we have the federal Schedule K included in draft form. So we would need the address for the shareholders. I didn't put those in there, but just note it's going to give you that informational type of information, even though everything ties out. We need that to process. And then we have the enter receipts data for previous 3 tax years in the miscellaneous screen in order to determine whether or not the 8990 is required. And then the federal beginning balance. Notice the beginning balance is out of balance. The ending balance is in balance, but the beginning balance is out of balance. So I'm going to say, all right, the beginning balance is out of balance. Let's check that out. That's not good. That's on the balance sheet. So I'm going to say page 4. And I look down and I say, that's true. The ending balance is in balance, but not the beginning balance. Why? If I compare this out, I'm going to note that the capital stock should be 100,000. So if I go back over here and I'm saying, the capital stock should be 100. So I'm going to go back over and say, I'm going to change that. I'm going to jump to that field. Say this should be out the 100. See if that fixes that problem. Back to the forms. And there we go. It doesn't change anything on the ending balance, so that looks good. Let's go back to our diagnostics and scroll down. So we fixed that one. Of course, I did that on purpose all the way through so that we can fix that in the diagnostics. So enter gross receipts data for the previous 3 years. Method used for verifying closing inventory missing. So I can take a look at the method used for the closing inventory. I'm going to say lower of cost or market. And so checking the method used, back to the diagnostics. And scrolling down, there we go. Now these up top in this software, those will be typically the critical diagnostics, which means we can't process the return until this information is in there. It probably won't even let you basically process an e-file return. Obviously, we need the actual forms to be finalized before that would happen. And any of these critical diagnostics, unless they're overridden, will typically prevent the actual processing of the return. Then there's the items down below, which aren't the critical diagnostics. You could still process the return here, but these are suggestions that Lacerte is going to be pointing out to you. So that's how Lacerte will break out their diagnostic forms. Now you'll also note that if I go back to the forms here, we forced the Schedule L at the very beginning to populate. If we're not required to give the Schedule L, well, typically we may be required, we'll be required in this place, in this case, But if we're not required to give the iris the Schedule L, it might be good just not to give them the Schedule L. I mean, it depends on who you talk to as to whether that would be beneficial or not. In other words, if it's not required to have the balance sheet, many would argue, why give the iris more information than they need? You could just give them what they want, and if the Schedule L is not required, then just don't include the Schedule L. Some others might argue that, you know, if everything's on the up and up and everything looks good and you're confident about everything, it doesn't hurt really to add the Schedule L, because that's going to show that you're in balance, and that might even, you know, show that everything's done properly. But, you know, generally, if you're not required to give the Schedule L, then you might want to say that to not include it if you don't need to. When we start the tax return, we usually force the Schedule L to be there because I want in the data input process to use it to help figure out that we've done it properly. And that was in the balance sheet here. We went to the balance sheet miscellaneous, and I scroll down, and here's where we forced the Schedule L. So I would delete that and say, okay. Then if I go back to the forms, now Lacert is determining whether or not the Schedule L will be there. In this case, it's still there, but it's not forced to be there. So any kind of overrides that we had put into the system, we want to put those overrides into the notes as we put them into the system. And then when we go back and then go back at the end of the process, remove the overrides. So anything within the tax software that has an override in it, ideally, we only want to use the overrides to help us to implement the data, to get a feel for how we're going to implement it as we did, so we can implement the data in one step at a time, and then remove the overrides so that we can systematically remove them and still be in balance and understand what is actually happening, what the software is calculating. So ideally, at the end of the tax return, you don't want any overrides in the system. Anything that directly says that this is a force, this is an override, this is you doing something that the return typically wouldn't have. The system is being forced to put in a number here or generate a form that the system wouldn't be generating normally. You would normally want to remove all those overrides and just use them as a temporary thing to help you with the data input process.